Navigator with a stock market update, and it's April the 22nd, so the start of a new trading week. So, first and foremost, at the end of every week now, another new addition to Share Navigator is the end of week report. So, we'll summarize the markets, what to look out in the coming week, and also we'll update you on what's in our target buy watch list, both on the active trader and also on the long-term buy and hold, and then we'll have a little mention on commodities as well there. So these daily briefings are going to get shorter, and if you have any specific stuff you need covered, please do let us know in advance. Okay, so the market again, you can see Friday. So Friday morning we were discussing that we might get a bit of a relief rally on the Friday, but by the close the market would more than likely sell off given the geopolitical risk that was out there between Iran and Israel. Um, and also, of course, the bond yield's been over 4.6% again. And you can see here we've made a new low. We've crashed below 5,000. So that would have been a psychologically important area. Crashed below the 50-day moving average. And if you look at down to this level here, this is where you're really talking about another 5 or 6%, which is the 200-day moving average. And again, just to remind you, unless you haven't seen it before, this period of time back here in 2023, so that was it was the end of August to the beginning of October, there was an 11% sell-off in the S&P 500, and that's when bond yields as well started going over 4.5%. So the equivalent sell-off here, if the market was to follow the same pattern, would be actually down to the 200-day moving average at about 4,700. And this is a normal correction, guys. Just look at the market. It's had quite a big run. So to actually come down another 5% from here, it's not bearish. It's just a proper correction in the market. And if you think about it now, investors have an alternative investment now, and a real alternative investment with interest rates being at 4.6%. So our short futures position, we're going to exit this at 4,900. So we also put short puts on there to generate additional premium, and we're probably going to close those at the same time. So when we do that, I will let you know. But what we're also looking at now on the S&P 500 is starting to look at our long outlook, because we are bullish on the market in the longer term. So we're looking at selling puts at the 4,800 level. So whether you do that through SPY or the S&P futures options, everybody will be different on that. But at this moment in time, you can generate about a 0.75% in premium for selling those options, those put options, and the probability of profit is about 83%. So remember, with that, you want to be certain you actually want to go long on the market. And that trade is only a 25-day trade at this minute in time. So it's actually quite a good return if you think about it over 25 days. And at 4,800, that's where we'd probably start thinking about going long in the market. Just looking at the momentum indicators, if you look at here, our shorter term 5-day RSI is now oversold. So I would expect a short-term bounce in the market at some stage this week. So we've got big earnings out. You've got mega cap, earnings. You've got Microsoft, Tesla. You've got Google out all this week. So they have the potential to move the market if earnings are good. But I think the market expects those earnings to be good. And it's really what's their interpretation of what's coming ahead of it that's going to be very important. And then on Friday, we've got the closely watched core inflation data. So that's what the Fed really look out for when they're looking at inflation. And if that comes in better than expected, you might get a bounce in the market there. And likewise, if it comes in worse than expected, we may come down. So either way, we're looking at hopping off this short futures train at 4,900. We're not prepared to hold it any longer than that. And if and when that happens, we'll let you know. But this week, given that these kind of indicators are so oversold, well, this short-term one is so oversold, we will be inclined, to see some sort of a relief rally at some stage. The 14-day one now is getting below 30 again. And remember, statistically, guys, both of these situations here, when the RSI crosses back up, you've a greater than 80% chance of the S&P 500 finishing higher. So that's something there that we're going to pay close attention to, and that could be our cue to go along in the market. So right now we're just looking at playing a kind of a safety trade with the short futures, But if we get across back and above in a shorter time frame, we will let you know about that as well. So it's very important to understand a couple of things here as well. I'm just kind of looking at the performance here, the Magnificent Six. If you look at this, look what happened in Nvidia. And this is what I'm talking about. And it's now actually come in, it's now undervalued again. But look, a 10% sell off on Friday. Meta down 4%, Amazon down 2.5%. Like big sell offs. And these guys control a hell of a lot of the market. If you think, the S&P is made up, I think the top six is about 28% of the market valuation. So these are big, big sell-offs there. So looking at Nvidia here, and we said this could go all the way to the 200-day moving average, and that could happen. But it's now based on its fundamentals, and significantly oversold. But it can stay down there for quite some time as well. So this is a main contributor to the S&P actually selling off as well. So a lot of these, they've all broken down their 50-day moving averages, which is a concern as well. So no, that could change in a heartbeat this week because nearly all of them are reporting earnings this week. And if they report blowout earnings and give us a rosy picture going forward, we may get another leg higher or not. But a lot of these stocks now are actually starting to appear in our active trader watch list, which is very, very interesting. So speaking of our active trader watch list there, you can see we've taken some out. So as I said, we're not going to trade these now because we think the market may not be done selling off just yet. But, we actually took out a lot of the ones that we had in here. They've actually gone up and the RSI has crossed back up. So it is a fairly good trading indicator here. So here's some of the ones that have been added in. AMD has now made its way into it. Amazon has made its way into it, which is very, very interesting. We talked about Flutter. If you come down here as well, if you look at MasterCard's into it, Micron, Netflix, Nvidia, all of these stocks have significant upside potential and their RSIs are below 20 there. So there's a lot starting to line up in terms of active trades. I would still be cautious at this moment in time. Yes, I expect a relief rally, but I think it's going to be short term and I think we'll retest the low again, whatever low that is. So I would prefer to wait just to see another retest before we'd start getting into this active trader stuff. And then the long-term buy list, as you can see, that's starting to expand again as well as the stock prices start to come down. So some of them are starting to show good value there. Adobe, for example, there, and we put out in our newsletter this week that there's a lot of stocks in that buy watch list. Again, I would kind of lean towards just holding off buying anything until we see a bottom in this market, and then have your shopping list ready. So there's some good stuff there, and start doing your homework on those stocks. Moving on to our energy plays, natural gas there, kind of still trying to get above this 50-day moving average, having a big fight with it at the moment. If it gets above it there, and starts trading north of 2, I think we're going to make our run up to 250, 240, 250. So this is just a waiting game here at this moment in time. And crude oil continues to consolidate in this up channel here. So I would actually probably be expecting a bounce in crude oil to the upside again, coming off a bit in the release of tensions in the Middle East. Well, not a release, but Iran haven't reacted as of yet. And a lot of commentators think they won't. They'll try and let it just fizzle out. And that remains to be seen. Just on the euro dollar, hovering around here at this moment in time. There's not an awful lot more we can say here. I think the risk on the downside is 105, and I think we trade between this 105 to 112 range on the euro dollar. At this moment in time, I don't see it moving that much until we really see what the ECB are going to do. So if the ECB start talking about delaying their rate cuts, I think then you're going to get a weaker dollar. If not, I think the dollar is, might go down as low as 105, but I don't see much worse than that. And here's the big problem for the stock market, in my opinion, is these 10-year bond yields, 4.64%. I think they could go to 5, and if they do, that's why I think the market might make that leg down to 4,700 if they do get to 5. And that's why I'm holding off buying stuff at this minute in time. And so you need to keep an eye on that. And if that happens, then TLT, as we said, this instrument here becomes a buying opportunity as well. So if bond yields go to 5, I think the stock market will be down. I think that's the time you go in and buy it. Um, and then I think TLT will be another opportunity then at that stage. But until then, I think the safest way, as we said earlier on, is just to sell puts on the market just to position yourself. And finally speaking, just on the metals here, big sell off in silver here today. I would continue selling that. I wouldn't buy any of the metals at this moment in time. And copper seems to be holding its own up here again. Remember, this is the whole news flow here about the move to alternative energies, the amount of copper required, and then of course there's the I suppose China recovery story as well. And then gold, I would certainly hold if you did own it. I would just hold it given all the uncertainty that's out there. Okay, this is Stephen with an update. Thanks and bye for now.